Hello, I'm Diana Herrera. I am the Regional Flood Insurance Specialist in FEMA Region 8 in Denver. Let's talk about some frequently asked questions that we get regarding the National Flood Insurance Program. Maps really don't revise that often. They revise when risk changes. So when we identify that something has changed in the community, that is increasing or decreasing the risk. Maybe they've done a drainage project, maybe they've done a diversion channel that's going to reduce the risk or change the risk. Then we'll get information and we'll revise that. But we really don't change them that much. We've probably hit 94% of the population of the country with recent updated map information. Our mapping budget is not endless, so we have to go and issue or study areas where we get the best bang for our buck, meaning we know there's a huge population that's being affected by these map changes, whether it's in or out, and we want to change those maps. The grandfather rule and moving into the newly mapped procedure, that actually will be done automatically as part of the renewal process. We are re-underwriting our book of business, and we are asking the agent to provide information on that renewal so that we are actually rating it correctly, including grandfather information. So when a map changes and it's going from a low risk to a high risk, that movement into the newly mapped procedure or into the grandfather rule will be an automatic process. Going the other direction, it will not. So it requires the agent to take an action to make sure that that base flood elevation is reflected in the new premium and to the benefit of the property owner. The documentation necessary to get a refund depends on what the refund is for. Are we applying an elevation certificate to the policy? Then we will need to copy the elevation certificate. Is the mortgage company been paid off and the property owner doesn't want to continue the coverage? We'll need a signed letter from the mortgage company that says we no longer require flood insurance. If it is for a zone change or a base flood elevation change, then we'll need documentation, copy the map, information or a letter from the community official that this has occurred, and attach that to an endorsement request. Each one of those may carry different types of refund years. So check the flood insurance manual or check with your underwriting or your customer service to see how far back you can go to refund the premium. We talked about the rating elements, but the main thing about rating flood insurance and the cost of flood insurance is that this is a single peril policy. It is the most used peril in the industry. You're more likely to flood than you are for any other peril on any other property policy. So over the term of a 30-year mortgage, if you're located in a high-risk area, your chance of flooding is at least 26% over that 30-year mortgage. So it carries a high risk. When it carries a high risk, your premiums are a little bit higher to cover that risk. Yes, it is difficult sometimes to rate a flood insurance policy, but there are so many factors that affect the cost of that insurance. Does it have a basement? Does it have an enclosure? When was it built? Was it built to any specifications? So all of those factors go into determining how we rate a flood policy. So, and it's not going to get any easier as we progress through this program. But it is what it is. One thing I can say is the more you know about it, the more you do it, the more proficient you become. A standard X zone rated policy is different from a preferred risk policy. Because preferred risk is just that. It is in a low to moderate risk flood zone. It has a very limited loss history, just like you do a preferred risk auto. When it's not eligible for the preferred risk, then you move into a standard rate, which is what the standard rate is. And it is more, we take into effect the low to moderate risk, and we rate it that way, as opposed to how we rate it into the high risk, which the premium will be substantially higher. Does the NFIP cover land subsidence? No. If you remember the definition of flood, it is surface waters over 2 acres of ground or 2 adjacent properties. When land subsidence occurs, the water has seeped into the ground and has caused an instability that makes the movement of that ground in large pieces of earth, not just in any liquidity. Is sewer backup covered under the NFIP? Only if there's a general condition of flooding in the area and it causes that sewer backup will that be covered under the National Flood Insurance Program. Typically, just general sewer backup is not covered because it's not surface waters. Are mudslides covered? Mudslide is a covered peril under the definition of flood, but you have to be sure that it is a liquid flowing river of mud in order for it to be covered under the National Flood Insurance Program. What can a homeowner do to make their premiums more affordable? There's a couple of things you can do. If you're building new, you can elevate the structure. The higher you go, the lower the premium. So if you add even 6 inches onto the height of your floor and you don't have a basement, you don't have an enclosure, you've just saved yourself 50% of the premium. You go another foot, you save another 50%. So the higher you go, the lower the premium. If you've got an existing home, we may, and you are not compliant with the local floodplain management ordinance, you might check into some grants through your community to elevate your structure, particularly if you have suffered a loss. Those grants are available out there both before a disaster and after a disaster. There are ways that your clients can consider reducing their premiums. You can take a higher deductible, but you need to check with the mortgage company to be sure that that's okay with them. The homeowner also has to understand that the deductible that they select will apply both to the building and to contents separately. So you'll have, if you've got a $2,000 deductible, you have a $2,000 deductible on building, and you have a $2,000 deductible on contents. So that needs to be taken into consideration when looking at the financial cost should something happen. Can a property owner file for a supplemental claim after the proof of loss has been filed? Absolutely. We want to pay you for all of the damages that was caused by the flood that are eligible under the standard flood insurance policy. A lot of times when you start repairing structures, you get in and you'll see items that were not included in the original estimate, and you'll need to ask for a supplemental claim. Absolutely, you can do that. Just contact your company or have your agent contact, the agent contact the company and say, hey, there's additional damage on the property, we need to have it evaluated. A lot of times the company may just ask for an itemized estimate for the additional, and they'll review it and apply it. Why aren't contents covered in a basement? Well, let's go one step further. Why aren't they also not covered in an enclosure? When you look at our rating structure in the National Flood Insurance Program, we look at the lowest floor. And if the lowest floor is below the base flood elevation, it carries a higher risk. So we want to limit the exposure that we have to the NFIP for those high risk exposures. So we limit the amount of coverage that we have both for building and for contents in basements regardless of the flood zone, or in enclosures below elevated buildings in special flood hazard areas that are built after the community adopts regulatory authority over the land use. You know, we get asked all the time why an agent is requiring full replacement cost. You know, if you flood, you're not going to lose the whole house. Well, there's a very good reason for that. Under the standard flood insurance policy, particularly for single-family structures that are primary residences, there's a clause in the policy, as there is in most homeowners policies, that if you don't insure to at least 80% of the replacement cost, then we're going to assess actual cash value on your claim for building damage when a flood does occur. So it's better to insure at least 80% of the replacement cost, but you know what? You never know when something sudden is going to happen and the building's going to get washed away or damage to the foundation, or make it uninhabitable to where it's going to have to be torn down. Well, actually, to handle disputes between flood zones from the lender and flood zones from the agent or from the company are sometimes fairly easy to do. Sometimes the lender may do an electronic lookup, not actually looking at the flood map. Maybe you've looked at the flood map yourself and say, hey, this isn't anywhere close to the flood zone or to the high-risk area. But there's a couple of ways that it can be solved. One is contact the lender's flood zone determination, get a copy of their determination, copy of what they do. Ask for a manual redetermination so that they will actually look at the map and then compare the two. As our maps get better and we use digital maps with aerial terrain underneath of it, it's a little easier to determine whether or not structures are in or out. But we still have those very close calls. Might need to obtain a land survey where the surveyor actually goes out and measures where the structure is located on the property, submit that back to both companies and ask them to do a manual determination. The last process would be to go to FEMA. There is called a letter of determination review. Costs about $100. FEMA will look at the documentation that both people used or both companies used to make that determination and determine which one is correct and issue a letter on their opinion. That would be the final one. You know, we actually get the question about the amount of coverage required by the mortgage company if the loan balance is really lower, a lot lower than the value of the home. There's a very good reason why that mortgage company is requiring that, because they feel that they need to not only protect their risk, but protect their clients' risk. In recent flood histories where we've had severe damage, they have had people walk away from the loans, period, and the mortgage company is left holding that property in their portfolio. It is very important when it comes to having the right amount of coverage, particularly when there is a loss, because if you don't carry 80% of replacement cost, then the damage is going to be assessed on an actual cash value basis. So even though you may have damage that exceeds the amount of the loan amount, when it comes to depreciation, it might not reach that, and you may not have enough, the property owner may not have enough coverage to repair. You live on the 4th floor of a condo. Why do you have to have coverage? Well, as a tenant in common in a condominium building, you actually own the 1st floor. And when any part of the building is in a special flood hazard area, flood insurance is going to be required by the mortgage company or mortgage companies for all of the unit owners that are in there. So the mortgage company is protecting their interest for the whole building. Keep in mind, when floods come, it hits the first floor first. So if you need additional information, you can contact your regional FEMA insurance specialist or the regional manager for our NFIP bureau. Their information can be found in your flood insurance manual. You can also visit FEMA.gov or floodsmart.gov. You can contact one of our call centers for information, or you can contact your company.